For more than a century, the stock market has been the beating heart of global finance, a place where fortunes rise and fall in seconds, and where human intuition, emotion, and experience once ruled every decision. But today, something extraordinary is happening. Artificial intelligence, once just a futuristic concept in science fiction, has quietly taken control of Wall Street's most powerful systems. The algorithms that once predicted weather, analyzed speech, and recognized faces are now predicting market movements, sometimes faster and more accurately than any human could imagine. The question is not if AI will change the stock market. It already has. The real question is, how far will it go? Let's go back a few decades. In the 1980s, the fastest traders on Wall Street were humans with telephones. By the early 2000s, trading floors were replaced with computer screens and high-frequency algorithms. But these systems followed strict rules. They could only act on what humans programmed them to do. Then something shifted. Around 2015, the rise of deep learning and neural networks gave computers something they never had before: the ability to learn patterns on their own. Suddenly, machines weren't just executing trades. They were thinking. AI began to read the markets like a living organism, sensing rhythm, predicting mood, and reacting to tiny changes in real time. Imagine a system that can scan thousands of news headlines, tweets, and financial reports in a second, then decide whether Apple's stock is about to rise or fall. That's not imagination anymore. It's reality. AI models like GPT, BERT, and Bloomberg GPT are now analyzing massive amounts of data to help traders make decisions that once took teams of analysts hours, if not days, to complete. But how does it really work behind the scenes? Think of AI as a super analyst that never sleeps. It doesn't get tired, emotional, or biased. It scans global events, politics, oil prices, social sentiment, and even satellite images to detect subtle signals. For example, if AI notices that fewer cars are parking in Walmart's lots this month, it may predict a slowdown in sales before earnings reports are even released. These micro-insights are pure gold for investors. Big firms like BlackRock, Goldman Sachs, and Morgan Stanley are now building AI-driven strategies that manage billions of dollars automatically. Their AI systems monitor market volatility, predict stock correlations, and rebalance portfolios in real time. Even retail investors, everyday people, can now access AI through platforms like Trade Ideas, Kahoot, and TrendSpider, which provide intelligent stock alerts and auto-trading features. The power of AI isn't just in speed, it's in precision. Traditional traders often rely on technical indicators like RSI, moving averages, or MACD. AI goes far beyond that. It builds complex, multi-layered neural models that learn how millions of factors interact simultaneously: economic data, consumer behavior, interest rates, even climate conditions. With reinforcement learning, the AI tests thousands of scenarios, adapts, and improves over time, just like a human learning from experience, but at a superhuman pace. However, the rise of AI in trading has also created a new kind of battlefield, one that most people don't see. Behind closed doors, massive AI systems are competing against each other every millisecond. These battles happen at speeds faster than the blink of an eye, with billions of dollars in play. It's no longer about who has the best idea. It's about who has the fastest, smartest machine. One of the most fascinating examples is AI sentiment trading, where machines analyze the emotions of the entire internet. Suppose Elon Musk tweets a single word about Dogecoin. Within seconds, AI bots around the world read it, assess the sentiment, and execute trades, sometimes before most humans even see the tweet. This instant reaction gives AI traders an almost unfair advantage. But while AI brings incredible efficiency, it also introduces risk. Machines don't think like humans. They lack judgment, context, and empathy. If trained on biased or incomplete data, they can misinterpret signals, causing sudden market crashes. Remember the flash crash of 2010, when the market lost nearly $1 trillion in minutes? That was caused by automated trading gone wrong. And today's AI systems are far more powerful. Regulators are still struggling to understand how to control this invisible force operating at lightning speed. Yet, despite these challenges, the benefits are too great to ignore. AI has made markets more accessible, data-driven, and efficient. It has reduced human error and allowed investors to diversify intelligently. Some hedge funds using AI, like Renaissance Technologies and Two Sigma, have outperformed traditional funds for years. Their secret weapon? Constant machine learning and adaptive modeling that spots opportunities humans overlook. What's truly transformative, though, is how AI is democratizing finance. In the past, sophisticated trading strategies were locked behind the walls of Wall Street. Now, with AI tools and open APIs, even small investors can analyze complex data sets, predict trends, and automate trades. Apps like Robinhood and eToro are integrating AI assistants that suggest personalized strategies, risk assessments, and portfolio optimizations. Beyond trading, AI is reshaping the very structure of financial markets. AI-driven robo-advisors are managing retirement portfolios for millions of users, using predictive analytics to balance risk and reward. AI fraud detection systems are saving banks billions by detecting suspicious activity within seconds. Even credit scoring is evolving. Instead of relying only on income or payment history, AI looks at spending patterns, lifestyle, and online behavior to determine risk. In 2025 and beyond, we're entering an era of autonomous finance. Imagine AI systems that can manage entire investment portfolios, negotiate trades, and adapt to new economic conditions, without human intervention. Some experts believe that within a decade, 90% of all trading volume will be AI-driven. The human role will shift from decision-maker to overseer, someone who guides and audits the AI, rather than competes with it. Of course, this revolution comes with ethical questions. If AI can manipulate markets or gain unfair insight, where do we draw the line? Should there be limits on how much AI can trade? And what happens when multiple AIs start learning from each other? Evolving strategies too complex for even their creators to understand. These are the moral frontiers of finance. Still, AI's influence on the stock market is not just about money. It's about how we see intelligence itself. For centuries, the smartest investors, Warren Buffett, George Soros, Peter Lynch, built their success on human intuition and understanding. AI challenges that legacy by proving that intelligence can also be algorithmic, mechanical, and purely data-driven. Yet, the best investors of the future may combine both worlds. Human judgment guided by AI precision. Because while AI can predict patterns, it can't predict human emotion perfectly. Markets are still driven by fear and greed, and understanding that emotional heartbeat will always require a human touch. Looking ahead, the rise of AI in finance could lead to new kinds of careers. Instead of stockbrokers, we'll see AI strategy engineers, data-driven fund managers, and financial ethicists. Entire universities are already offering degrees in AI finance and machine learning economics. The new Wall Street will not just be a trading floor. It will be a digital battlefield where creativity meets code. So, how is AI changing the stock market forever? It's making it faster, smarter, and more unpredictable. It's turning information into power and power into profit. It's leveling the playing field while raising the stakes higher than ever. And for investors who can understand and adapt to this revolution, the opportunities are endless. In the end, one truth remains. The stock market has always rewarded those who adapt. Just as the telephone, computer, and internet transformed investing, AI is the next great leap. Those who ignore it risk being left behind. But those who learn to harness it, who combine human insight with artificial intelligence, will not just survive the future of finance. They will own it.